Zinc has been the weakest performing base metal over 2025, largely due to weak demand dynamics, with the outlook for zinc's largest end use in galvanizing steel, for example construction, under pressure from an ailing property market in China and downgrades to global growth due to tariff implementation, limiting advanced economy demand. In addition, robust mine supply recovery has negatively impacted investor sentiment for zinc, easing a significantly tight supply profile over the 2022 to 2024 period. We forecast the zinc market will flip into a building surplus over 25 and 2026, limiting upside support in the medium term. However, with multi-year low LME stocks, a backwardation structure on the LME persists, creating a global divergence in benchmark prices from west to east, muddying a clear market trend. Global mine supply is on track to rebound in 2025 and 2026, following 3 years of prior declines. This will be supported by double-digit growth in Africa, in the DRC's Kipushi mine, and increasing output in Peru, China, and across Europe, including in Bosnia, in Ireland on the resumption of operations at the Tara mine since October 2024, and in Russia on the commissioning of the Ozanov mine in September 2024. In turn, this will allow refined output globally to recover in our forecasts after posting a decline in 2024. Indeed, we see gains focused in China, in which increasing availability of zinc ore is expected to help lift record low RCTCs this year from an annual benchmark of $80 per tonne up to around $160 per tonne next year, with current zinc prices no longer challenging smelter profitability. It is worth noting that Chinese production in August rose to a 17-month high, with the domestic market forecast to enter a surplus to year-end. In addition, the ramp-up of operations in Q4 2025 of China's Kulen smelter is expected to add 560,000 tonnes per year of production, almost equivalent to the annual level of net imports of refined zinc into the country, although we do not expect China to become a net exporter of material. Zinc's significant exposure to the galvanizing industry at more than 50% leaves a recovery in demand vulnerable to future investment plans, particularly in major demand countries like China, Europe, and the US, with demand growth in China on a decelerating track in traditional demand areas. With this in mind, we expect consumption to be led by demand outside of China, India, and Asia ex-China. However, uncertainty and a lack of investment decisions, given a new trading landscape, will remain a headwind.